My name is Rob. I'm one of the founders of Tradewell, and in this video I'm going to give you a brief overview of how you can use the platform to improve your trading decisions. So let's take a look at the platform. This is the home section, and if you're a trader, it probably looks very familiar. It's a basic price and indicator chart. At the top, we have a candlestick chart of Apple's stock, and below there's a line chart of a popular momentum indicator called the Relative Strength Index, also known as RSI. Now, if you're like most traders, you look at chart patterns to decide whether or not to buy or sell. The problem with this approach is that charts aren't very smart. They can't tell you whether your decision to buy or sell is actually a good decision, because charts don't provide analysis. If charts were smarter, they'd reveal numbers and probabilities behind the patterns, and they do this instantly, without asking you to write code. And that is actually exactly what Tradewell does. And to show you how, we're going to use the Tradewell platform to evaluate whether buying the dip has been an effective way to trade Apple's stock. If you're new to trading and haven't heard the term buy the dip, it simply means taking a position in an asset after its price has dropped. So when traders buy the dip, they're buying an asset that's falling, with the expectation that price is going to rebound. Now, let's bring our attention back to the charts. You'll notice that indicator RSI is preloaded in the line chart, right below the candlestick chart. The indicator measures price momentum. So if a trader wants to know if buying dips in Apple stock is a good strategy, one way to answer that question is by confirming whether low RSI values today result in rise in prices of Apple stock tomorrow. With Tradewell, analyzing these types of data relationships is really easy to do. Let's take a look at how easy. When we look at our backtest form, the asset we're already testing is set to Apple, and the metric is already set to RSI. So the next step is setting a range of RSI values that corresponds to the dips that we see on this chart. Looking at the chart, RSI usually falls somewhere between 30 and 40 whenever Apple shares dip. So let's use the range slider that sits directly below the word filter to input this value in the range. And we can use the input boxes to adjust the numbers precisely. Now that we have our range in place, we're going to hit the Find Signals button. And instantly, our chart highlights all of the times when RSI was within that range. On the candlestick chart, these days are represented by black candles. And on the indicator chart, they're represented by black dots. If we look at the bottom corner of our app, we see that the sample size is just 9. A number that small isn't really going to tell us that much about the effectiveness of our strategy. So let's see if we can broaden our sample size by adding some years of data. We can do this by navigating to the range slider below the indicator chart. Let's set the look back years to 20 years of data, and refresh the chart by hitting the Adjust button. Now you may have noticed that after adding additional years of data, some of the new RSI values on the chart sit below our initial range. These lower values also represent price weakness, so we want to include them in our analysis. To do that, let's return to the filter and reset the range of values. Let's set the new range of values of RSI between 17 and 30. And now we'll hit the filter button to highlight those new days. And bingo, now we have 105 days of signal data, which is a sample size large enough to give us more confidence in our analysis. The final step is hitting the backtest button. Clicking it automatically switches Tradewell from chart mode to analytics mode. You instantly see data visualizations and insights that you can use to improve your trading decisions. There are 5 analytics sections. The first you see here is our scatter plot. Next, a comparison of histograms. Third, a day-by-day historical price path forecast. Fourth, a summary table of probabilities and key statistics, and lastly, the Signal Data tab, which shows a performance record of each individual trading signal. We won't cover each of these in this video, but if you want to learn more about any of them, you can visit our topic-specific tutorials at documentation.tradewell.app. Together, these tools help traders move beyond basic charts to uncover important probability and risk insights. And what about our original question? Is it a good idea to buy Apple on the dip? Well, Tradewell can't predict the future, but it can tell you this. Over the past 20 trading years, that trading strategy has been a pretty terrible bet. When we compare the 20-day average return of the strategy to the 20-day average return of all of the data in our look-back period, buying Apple on the dip does not outperform random Apple returns. In fact, you would have lost 1.32% if you bought Apple with an RSI between 17 and 30, compared to Apple's anytime return of just under 3%.